Hello. Welcome back, everyone. After a holiday week, we had a shortened week last week, and we weren't streaming or trading in the live room. Had a few little trade opportunities in Discord, but nothing too crazy, right? I stepped away from the markets for a decent bit of time, and we're back. It's now July 8th, and with a full week ahead with some potential turbulence this week. So we're starting the week off. We have, excuse me, ooh, we got Jerome Powell coming on the wire on Tuesday and Wednesday, and then we have the CPI and PPI data that comes out Thursday and Friday, respectively. So we've got some decent news this week and potential heavier volume as markets climbed into all-time highs last week on weaker volume. So a decent push into a holiday week. That's generally the case when we come into these holiday weeks like this. Especially around July 4th, markets tend to have some kind of stronger, lower volume push to the upside with typical July seasonality is bullish, right? July over the past multiple years, over I believe like 12 years or so, has closed out green. So trying to short as this thing continues to climb into highs is just donating money realistically. Now let's take a look at some of the news that's come out here on the weekend, yesterday, today, as we get ready for these markets, and we'll create a trade plan around the S&P 500. So Hollywood's in the news lately, right? Opening for Paramount Global following several drama-filled twists that saw final agreement to merge with David Ellison's Skydance Media. It's a complex transaction, but there are hopes it can restructure a Hollywood icon that has erased about 70% of its market value following a recombination of Viacom and CBS in 2019. The company was later rebranded as Paramount Global, but has since experienced cash troubles with its streaming business Paramount Plus, suffered a decline in linear TV, CBS, and MTV, and saw the S&P Global downgrade its debt to junk status. So Sony Pictures and Apollo have been, after the company, as well as IAC Chair Barry Diller, there have been serious M&A tensions along the way, with results in the April ouster of Paramount CEO Bob Bakish, who was quickly replaced by an office of CEO led by 3 division chiefs. However, the upcoming deal will bring together old and new Hollywood with the end of the road for Redstone Dynasty and the rise of Ellison era after big hits like Top Gun Maverick and The Reacher. So Paramount and Skydance have worked together in the past, co-producing films like Terminator, Transformers, and Mission Impossible franchises. So we see a two-step deal would initially see Skydance and its partners acquire National Amusements, which holds the Redstone family's controlling stake in Paramount for $2.4 billion in cash. And the next step will merge Skydance and Paramount, offering a total of 4.5 billion or $23 in cash or a stock to Class A voting shareholders, PARA, right? That's the ticker symbol, and a $15 for non-voting Class B shares, as well as an additional $1.5 billion for Paramount's balance sheet. And once the deal closes, Ellison will become the CEO of the new Paramount, while former NBC Universal CEO Jeff Shell, who currently works at Skydance investor Redbird Capital, will run the day-to-day as president. So the deal also grants Paramount 45 days to find a competing offer and will likely take months to close in its current form as regulators review the combination. So not really a massive market mover, realistically. It's just one of those things that's on the newswire right now. We also have Boeing, which has agreed to plead guilty to criminal conspiracy charge to defraud the U.S. government after the DOJ found that it violated a settlement over 2 fatal 737 MAX crashes in 2018 and 19, and the plane maker will face a maximum fine for the offense, or $487.2 million, and will be required to invest $455 million to strengthen its compliance and safety programs. So the victims of families said the plea deal, which will avoid the courtroom, fails to hold Boeing accountable for the deaths of 346 people killed in the crashes, and legal experts also believe the guilty plea may not affect Boeing's defense contracts, as the Pentagon is highly dependent on the company. Now, in terms of general news, we've seen Equity markets just continue their rally. We can take a look at broader overall big tech companies like Apple, for example. Apple has been pressing into new all-time highs continuously from last week. It's gapping up right now. Nvidia, however, is one of the laggards. It's trying to gap up a little more here pre-market, but it is lagging in essence in comparison to what we've seen with like Microsoft, Google, Amazon, Apple, as we've seen. So Microsoft, for example, is another one that's continuously rallying into all-time highs. Google as well. Amazon here is breaking out to the upside as well. There's a lot of bullish. Even Tesla went on a huge run after it broke out of this consolidation last week, up about 35%. So there's a lot of catch up going on with these big tech companies, but the ones that have been leading are starting to kind of lag a little, like Nvidia, and big semis are ones to watch to see for the general movement of the market. Now, like I said, shorting into all-time highs is a very fickle process and something that I'm not a fan of. Trading into all-time highs is a bit hard in general, so I need to see a little more time and information coming through, as we'll see very soon on the S&P 500 plan. But all in all, right, July is a very hard month to turn red. There are underlying signs that we could be near a top, right? Generally speaking, I'm not trying to pick that out, but I'm getting cautious as summer seasonality, specifically towards the end of July, starts shifting to the bearish momentum as we saw last year. So it's a time for equities not to necessarily be buying them, but taking some profits off the table, in my opinion. So to jump into the S&P 500 futures here and create a trade plan for today's trading session, we've got, what do we got? We've got an expansion outside of a larger distribution that was created from prior weeks. And typically when we see a consolidative period at all-time highs, the potential of a move even higher, is to be expected. Right? If I want to see a failure of all-time highs, I want to see multiple days of just gradual upside momentum. That fails all of a sudden, right? Without creating distributions, without creating balance at these highs. And we could be in for something like that this week. Last week, remember, it was a low-volume rally, which typically isn't so super well sustained. Now, like I said, you have to be very careful here trying to short this, but in my opinion, if we start moving below the distribution area of 5,600, where there's a lot of imbalance on the S&P 500, that starts to build the case for some potential downside, specifically under 5,585. So until those areas break this week and we get significant closes, I don't want to be on the bear side realistically. The case for the bear is a head fake above these highs and there's massive sellers, but that's information that comes real time, right? That's information that has to be built out. So as things stand, we're holding to the upside fairly well. There's two areas, 56, 12, 14, and 5600 to hold on these pullbacks today. They are fairly significant, but if we just start going bid through this 5630, right, I'll just be looking for shallow pullbacks to continue this momentum move. Like I said, lower volume week last week. There's not crazy heavy volume to start this week on the S&P. 120,000 contracts have been traded. There's about 20 minutes until the market opens, so it's fairly weak. And I'm going to be cautious into these areas. Trading into all-time highs, lowering size, lowering risk, and not getting necessarily too aggressive, especially trying to continuously short this without any real significant sell-side pressure unless distributions break is the way to go. So going into this after a week off pretty much, very few trades last week, and a holiday week that led markets into the all-time highs is something that I want to like nimbly tiptoe around until information is presented. So that's the plan. We're still holding bullish, right, until we see 5,600 break. It's just going to be a difficult path to continuously short this. Some areas, if we head fake above this 5630 and we just re-offer, slap back down under 5625, that makes the case for the bear. Otherwise, I don't necessarily want to be trying to fade against these continuous buyers that are just stepping into prices. So with that being said, I'm going to be opening up our live trading room, and I'll see you all in there. Good morning, everyone. Laurent Edison, thanks for jumping on here on YouTube, and I hope everyone has a great start to the week. Started off, right, with risk management intact and moving very thickly around these all-time highs. Jerome Powell testifies 2 days in a row starting tomorrow with CPI and PPI data, meaning that the start of the week could be a little slower. So keep that in mind as we get jumping into this full trading week as opposed to last week. And I'll see you guys tomorrow. Check out community.tradeproacademy.com to get into our free Discord. So thanks all. Let's open up our